And we're live.
Are we live, are we, Tom? It's not up yet on my little screen here, but we are live.
No.
Real Estate Exposed, Phil Tarrant, Tom Panos. Are we not live?
No, we are live.
We are live.
It says live here, and I'm just going to wait and see as audience beyond. Yep, we are live. So
we are live.
Phil, welcome. Phil,
G'day.
were you sitting? We spoke last week when you went to Canberra. We left the stream, and you were heading to the airport, and you went to Canberra, and you listened to Anthony Albanese deliver a response to the budget. Were you in the room when Albanese was doing it?
No, so we did the response in cabinet. So last time we left each other, I jumped on a plane. On that Thursday afternoon, we saw the Ukraine president address Parliament, which was a pretty significant event. So within the chamber, it was on a big screen there. I think a lot of us watched it on TV. He gave some sense of what's happening in Ukraine and where Australia could support. And then subsequent to that, the leader of the opposition, Anthony Albanese, stood up and did his traditional budget response, and everyone could have watched that on ABC. I went to the function subsequent to that, which is the official budget response dinner, where all the pollies come out of the chamber and come over. We're at the QT Hotel in Canberra, and Anthony Albanese stood up there and gave some context to what he spoke about in the chamber around how the Labor government saw the government budget, where they would do things differently and their approach moving forward. What we've seen, Tom, is really an indication of how and where the Labor government will be taking their sort of policy setting and their policy attitudes as we run up into the federal election, which is happening in May of this year. So the big headlines for me, Tom, listening to the leader of the opposition on the evening, he just reinforced a lot of the stuff he was talking about inside of his official budget response in Parliament, but he really focused on the whole aged care agenda. I think you've got a real indicator there, or he's telegraphed exactly where he thinks they'll be taking a lot of the discussion and debate from a policy perspective for Australians to try and win the hearts and minds of Australian voters. A bit of a focus, or a much more clarity on the focus are on aged care. So those of us with elderly parents who are going through that journey right now, he's talking about putting nurses back into nursing homes. But again, it's something very emotive. We're all on a pathway, mate, as you know, towards old age. And for some people, old age is a really nice time. For some people, it's a little bit more challenging. And unfortunately, a lot of us end up in nursing homes. So that's the pathway it looks like they're going to be taking to the agenda, to the election. A whole bunch of stuff around the cost of living, trying to make housing more affordable, which is relevant for this discussion. But by and large, mate, there was nothing really new there for me. There's nothing that really stood out and I went, hang on a second, that's a real game changer. I think they've made it very clear that a lot of the reasons why they feel they weren't successful in the last election was around those property taxes and taxes associated with people's superannuation or self-managed super funds. So they've been really clear saying, yeah, we're not going to touch with that stuff, so don't worry about it. Don't make that an election issue for yourself. Take it easy. And they've given some sense of continuity to spending around cybersecurity and intelligence and national security. So not a lot there, yeah, mate. We're still a lot of water under the bridge until we get to May, and we all stand up there and put our vote in. But that's my wrap up, mate. Like most budgets, a lot of noise, a lot of what ifs, a lot of stuff. You go, well, that's not really relevant to me. Why is even that important? Nothing groundbreaking, mate. My wrap up. I don't know if that's satisfactory for you. I'm sure you've probably got a different view.
Sam's asking you a question. Can you answer that?
And you believe Albanese?
He's gone on to say this.
He will scrap negative gearing. You can bet on that. Who knows? And this is, again, probably something that the coalition government will be trading on is, can you believe what they say now? What happens? To be fair, listening to him, and it would become really clear, was the relationships with, or the relationship of the Labor Party with the unions, how they're going to go about cultivating wage growth or structured wage growth, which I think in many ways in this modern age is a little bit redundant, and maybe the union officials wouldn't appreciate me saying that. But the big question for me, Tom, and I hear all the time, everyone talks about, and the RBA governor's talking about it right now, until he sees real wage growth. Until he sees real wage growth, he'll start looking at inflation in a different way and therefore start tinkering with the settings on the official cash rate. Mate, in our business, it just feels like constant wage growth. So I don't understand who's not getting wage growth at the moment and where these numbers are coming from. It's a big question mark for me, mate. What are real estate agents saying about it? They must be doling out pay rises all over the place in order to keep people.
Well, in real estate, of course, Phil, we've got, commission-based staff, and then you've got salary-based staff in different functions. Property management and sales are more inclined to be about salaries, and they do have issues because at the moment there's a labour shortage and they're paying extraordinary money. Property managers are now on six-figure packages. And even good admin staff, sales support staff, $60,000, $70,000, $80,000. Salespeople, it's less relevant because they are purely commission-based. That's the way they get rewarded. Phil, I'm curious, and you don't have to tell me the answer, but I'm curious. Have you made the decision on who you're voting for? Do you make a decision closer to the election?
We spoke about this briefly last time around, where as we get closer to the election, the clarity of people's thinking about the way they will vote. Where we are right now, there's a lot of discussions around climate change, which has been propagated by some of the weather events we're having right now and who's to blame for that. This discussion around aged care. And I think most Australians will go, yeah, I want a better quality of life for my parents, my loved ones, and myself. But as you get close to the election, you start getting a lot sharper in your focus. Yeah, I know which way I'm voting as it sits right now, which I'm often quite torn by, Tom, because, I comfortably sort of, I think, have a foot in both camps in relation to where the natural home of the Labor Party is and where the natural home of the Liberal Party is. I grew up in a very working class background in a Labor household. I now are probably in a bit of a different socio-economic framework to where I grew up. So I understand a lot of the appeal of the Liberal Party. So, mate, I'm absolutely a swing voter. I'm torn straight in the middle, mate. I wish we could meld them all together into one, and I'll probably be pretty happy. So that's a pretty neutral journalistic answer. Which way you're voting?
I'm in the no. I'm going to decide in the last day or two. And I don't hide it. I'm a swinging voter. I was brought up in the Canterbury Bankstown area, Belmore, Lakemba, and I came from Greek immigrant parents who adored Golf Whitlam. Golf Whitlam was a person that all the Italians, the Greeks, the Lebanese, they saw Golf Whitlam as the person that represented what they stood for. Actually, I'm the same as you. The demographic I came from, a lot of the things that Labor traditionally stood for, which was, trying to have better health services and better wage equilibriums out there. But obviously, working in real estate now, I'm paranoid. I've got a few senior people at News Corp that have said to me, I'm sure that, if Labor were to get in, that at sooner or later we'd see some sort of taxes come in. It might not happen straight away. So I'm obviously mindful of that. But Phil, I got to tell you, right around the country right now, I've always said it, we were going from nuts to normal. It was Sydney and Melbourne, but it's now becoming clear. I had a conference with McGrath for 2 days, yesterday and the day before. We had agents from all over Australia. It is happening everywhere. There is a change happening. We've had 2 years of unprecedented, unexpected growth. We're seeing that slow up in certain parts of Sydney and Melbourne. We have seen price corrections. And we're now seeing it today. I was talking to people, the people that are going to Noosa, the buyers there are saying, hey, we're not getting the prices we were getting before in Sydney. We want to be careful with as how we spend our money here now. That wasn't happening a month ago. You believe that we're entering a cycle, Phil, where real estate officers are going to have to look at their profitability, maybe not just being dependent on their sales business, but looking at how they can actually deliver more value out of their property management business, their rent roll business.
Yeah, absolutely. And if you're not yet having these conversations inside of your real estate office, I highly encourage you to start considering it. My view, and I guess, Tom, you're quite familiar with my job here at Momentum Media, executive editor of real estate. You know, I'm very fortunate. I have an extremely talented team that are best in the business. Yeah, my role really is to get a bit of a sense, environmentally, situational awareness, whatever you call it, about what's going on in real estate, to make sure that we're best serving our communities. And that's within real estate, is the real estate sector, you know, real estate sales agents, the property management sector, the connected lending sector with mortgage brokers, property investors. So pretty much the lifeblood of Australia, i.e. real estate, making sure that what we're talking about, what we're choosing to focus on, and where we choose to put the debate and the dialogue is right on message. And, you know, unfortunately, I get to speak to a whole bunch of different people, and where we see it right now, and really pertinent to this particular conversation, Tom, is we're moving now into a very different environment for real estate sales, where, you know, there's a point in time, and it happens in all markets, in Sydney and Melbourne in particular, prices can only go so high based on how much people are earning. They can't go on growing ad infinitum at the same rate they have done over the last couple of years. So there is a natural ceiling to real estate, and we're definitely at it right now, is my view. And this is a very simplistic view, and it's the way I like to see things. So can't keep going north because people can only afford so much, right? Pretty simple maths. Secondly, a lot of those who were choosing not to put their properties for sale over that COVID period of the last sort of 12 to 18 months, 2 years, are now going, okay, now it's time to transact in real estate. So more properties on market, less pressure on prices, more choice for buyers. And then running the backgrounds of that, Tom, is the whole undertow of the potential increase in interest rates. Now, a lot of Australians got the strongest family balance sheets they've had in many, many years. If rates go up, most Australians are going to be able to weather the storm, purely because structurally the banks have factored in that into their serviceability of their mortgages, right? Some people will do it tough, some less so, but there's a big question mark for people now. So all of this wrapped up alongside of, you know, price increases in terms of inflation, fuel, you know, and sundry, all the way ad infinitum again to all the economic commentators are talking about, means you're just going to get a different property market moving forward. You spoke to it, Tom. It's changed. It has changed. Also in Brizzy, which has been really ratcheting along. So we're moving into a market now, and again with me and my investors hat, where it's going to start turning into a yield scenario. So how can property investors start ratcheting up rents in line with demand in the market for them? Vacancy rates at the lowest they've been in some time, Tom. It's a lot of pressure on the right type of rental assets, houses in particular, right across the nation. And we're already seeing upwards push on rents. A lot of property investors now, and I would encourage real estate agents or the real estate sector to look at how they can champion it. Start thinking about, how do I manufacture equity now? So I'm not going to get the natural uplift in price growth purely because of the market. So I've got to buy well, and I've got to manufacture equity. I've got to spend money on my property. I've got to spend 20 grand for a reno to maybe get 40 grand in really basic numbers in capital uplift. Or I might need to spend 10 grand to change my rent from $400 a week to $450 a week. This is the market we're moving into right now, with 99% of the focus being on residential sales. I think moving forward, agents, officers, principals should be looking to weight the focus of the energy and the efforts of their team, and where they direct their business efforts, a 50-50 split between sales and property management. Property management being the inherent driver of value for most officers. It's where they are creating wealth, where they can transition that wealth into some dollars into their back pocket. Get it on your radar, get it on your agenda, start thinking about the value of your rent roll, and start thinking about how you can be supporting property investors to maximize their returns in these market conditions. You do that, you're going to grow your rent roll. Do that, you're going to get a very sticky rent roll. And what does that mean? A lot of real estate principals, Tom. It's where their wealth sits. So I'd say that's pretty smart business.
Yeah, it's a topic we must keep talking about, because I've got to say to you, a rent roll, if you own a real estate office, Phil, when you buy a rent roll, that is the best investment you can buy. If you look at every possible investment, you can buy a rent roll roughly paying a multiplier of $3.50 to the dollar, right? So basically, if it's bringing $100,000 income, it's going to cost you $350,000. What kind of an investment can you buy out there in the market? You can't buy residential, you can't buy commercial, you can't buy shares. You can definitely have a crack at crypto, but, well, let's call it have a crack at it. So when you turn around and say to yourself, what investment? It is a very, very good investment if you've got an infrastructure of a business. And we are now going through a phase. I've noticed, Phil, there are a lot of business owners that are saying what you're saying. David Highland in Cronulla, he said, mate, it's all about the rent roll now. You know, they've got 3,300 properties, and it's all about the rent roll, because not only are you getting the income, Phil, but you're also getting a percentage every year of those properties turning over. And if you are the managing agent of those properties, you most likely will be selling those properties. So if you've got 3,500 properties on your rent roll and 10% of those properties turn over, you've got access to 350 sales that are sitting there that are going to sort of turn over, and at an average of $20,000 commission, there's $7 million commission there in sales alone, let alone the recurring revenue that you're getting out of your rent roll.
In real estate, it's the lowest hanging fruit, I think, for sales agent, is to be connected in with a very well managed rent roll, and just inherently these properties are going to transact. And unless you're doing an absolutely appalling job, I would like to think that most property investors, if they want to turn those properties over, will speak to, I don't know what the stats are, will speak to the sales department to help them in that transaction. You probably don't need to do any other prospecting than just working your own rent roll. It's so simple, but I think it's so overlooked, Tom.
Yeah. And the exciting thing is, for the first time in 2 years, we are seeing rent roll or rental income grow in most places of Australia. Rents are on the way up, you know. There's an interesting comment here. Now, I'm not going to validate it because I haven't checked it out. Global house prices and Australian house prices showing a gobsmacking difference. 568% versus 68. I think what he's saying is Australian house prices have gone up 568. I think that's what he's saying. Now, Carl, I'm not going to say, man, that's I've got to check that out. But I think what you're saying there, Carl, is that prices have gone up significantly more in Australia than throughout the world. Is that the way you're reading it, Phil?
Yeah, the way I'd read that is over 42 years, if property prices were indexed against inflation, you'd have 68% growth, but the real growth is 568%. So what's that, 8 times more than what the inflation level? That's the way I'll read it. Maybe I'm wrong. But, you know, it's a good point. But, you know, again, it comes down to the dynamics of Australian real estate. I'm sure you could probably choose real estate or a whole bunch of other different assets or commodities that would have very similar numbers to it. Probably way outside of my high school economics lessons to probably answer that one, mate.
We've got QB there promoting his services there, saying he'd like to chat financing rent rolls. Yeah.
You don't mind a free plug every now and then, do you, Tom? Help him out.
No, I don't. Yeah, 100. Your rent roll is the cupboard to stock during a feast, for the salespeople to eat during a famine. Good on you, Rebecca.
Yeah,
well said. Well said. Well said, Rebecca.
Really
now, Phil, let's have a look at what's coming up next over the next few weeks. So we've got an Easter break. on the 15th. We've got Anzac Day that falls around late April. We don't have an election date at the moment, Phil, correct? But we do know that it is most likely
has to be in May.
Has to be in May, right? We've got that going on. So there's a fair bit going on at the one time. We have got a bit of a cooling of real estate. Steve's asking, what is the advice for first home buyers in the year of 22? I think Phil, if you are a first home buyer, you're actually in a pretty good spot at the moment because you actually have a little bit more choice and you've got the craziness that has sort of come off the top. So you're probably better off being a first home buyer right now than say a year ago.
Yeah, agree with that. And then you sort of juxtapose that, Tom, with some of the messaging coming out of government saying 2% for single parents and 5% deposits for couples under a certain wage bracket is all you need to pony up in order to get into the property market, and the government will guarantee the rest. You're moving into an environment where they want to get more Australians in the homes. This whole discussion around housing affordability and this whole discussion around how do we get first home buyers into the market sooner or more effectively, this ain't a new thing. It's happened with every generation. I remember my parents, it was hard for them to get into the market back in the 60s. Like, this is not a new thing, right? Like, this is just the way it is, and this is Australian real estate. I think what most people would benefit from, if you're our first home buyers, is to maybe recalibrate your expectations about what you need as a first home and how you want to live versus aspiring towards your forever home as your first home. First point. Second point, you don't need to buy a home to live in for that to be your first property. Go about maybe buying investment properties first in areas where you don't want to live, which represent good investment grade properties. And when you're at the point in time when you want to live in a property, you can sell them down, you can refinance them, you do whatever you want to buy that first home. Housing is affordable in Australia. If you get outside of the mindset and the concept that you need to be living within 5 kilometres of Sydney and Melbourne. Fact.
Well, first property you bought, Phil, where was it?
Oh, mate, investment property. It was in St. Mary's I bought. St. Mary's was the first property I bought. It was 200 and something grand, 2-bedroom, 5-row weatherboard shack on a corner block in North St. Mary's. First property. Second property, an apartment in Mount Druitt, 190 grand back in 2011. Third property, another Mount Druitt investment property. Fourth property, an investment property in Penrith. Fifth property, an investment property in Ambervale in Campbelltown Way. Sixth property, a property near Hornsby. A seventh property on the Central Coast of New South Wales, 200 and something grand. Eighth property, Brisbane. Ninth property, Brisbane. 10th property, Brisbane. 11th property, Brisbane. 12th property, Melbourne. All investment properties. They weren't homes I was living in.
You're rich. Did you what I was going to say, mate, what I was going to say, yeah, absolutely. You've got more properties than most people have, far more. But anyway, put that aside. I want to ask you, did you love the first and second? Like, a lot of people say, oh, I don't want to buy that because I don't like. I don't think you've got to like or love your first few properties. You know, like, it doesn't have to be perfect, mate.
You're not supposed to fall in love with property, Tom. You know, I speak to, and I must have spoken to thousands of property investors, right? And you'd be surprised how many people go, I just love property. And if you really interrogate that, why do you love property? Most people love property because they want to make money in property so they can craft for them the lifestyle that they want to have. And that's great. That's all cool. Yeah, but loving property just for loving property, which means you're probably going to start buying the wrong properties if you're going down that pathway as a property investor. Now, if you're an owner-occupier, Tom, it's a very different circumstance. You're buying properties for a completely different reason. I think the key thing for anyone investing in property or supporting people who are buying property is that you understand the purpose. If you're buying a family home, you want to love the joint. You want to visualize yourself in that property. You want to understand the utility of that property for crafting the family lifestyle or whatever else you're looking for. Investing in property is something very, very different, mate. Half the portfolio that we have within Smart Property Investment, which is the portfolio that I speak about, and you can go and look at it on smartpropertyinvestment.com.au. I haven't seen half of the property. I physically haven't seen half the properties in that portfolio. I'm not in love with it by any means, but I'm in love with what it's doing in terms of a wealth creation perspective.
Yeah, well, listen, I actually think, Phil, that maybe this is a golden opportunity for investors to grow their portfolio, for first home buyers to buy a property. And the reason I say it is, if you think about it, if rents are going up, it actually might make sense for people to actually be moving away from renting and buying. Yeah, listen, the next few weeks, Phil, are going to be really interesting weeks. I'm following both the markets and the elections and agent and mortgage brokers' feedback. I'm following it very closely. I think we're at a tipping point at the moment. I can tell we're moving away from business as usual, right? And I know that you've got some strong views about, which we didn't talk about them, but we'll talk about them. It's your favorite. I've noticed it is a very favourite subject of yours, and that is the security of Australia. And you have a personal view that maybe we're just being a little bit complacent and blasé about security, and you know what they say, Phil? Whatever's not in your face, you don't care about. Kids starving in Ethiopia are not your problem if you're not seeing it every day, right? And I think what you're sort of saying is that many people in Australia are underestimating the important issue of what's going on in the world at the moment in terms of democracies, dictatorships, the way things are being led. We must talk about this subject. I know it keeps coming up in you. You believe it's something that is not being taken serious enough by Australians.
I think it is, to a degree, being taken serious. And you've seen it in the coverage coming out of the budgets. Both parties are, giving some sense to the strategic environment. There's been a lot of debate, Tom, around whether or not Labor, if they were to get in the government, would maintain the same focus of government spending. Pick up the paper, mate, even and if you want, a baseline litmus test of the significance of this, and we've spoken about this before. I read the Daily Telegraph every day without fail, and that gives me some sense of a certain demographic of Australia and what's important to them. Every single day, Tom, every single day, if you pick up that paper, there'll be something discussing the security environment for Australia right now. Most recently, it's been about this, the leaking of this document between China and the Solomon Islands about potentially setting up some Chinese military bases there, or some sort of security arrangement. Right, this is the big topic of debate right now, mate. This is front page stuff in the Telegraph. So to give some sense to it, I think there's a relevance for all Australians just to be aware of Australia's part in the world and some of the challenges it's going to be facing moving forward. And going back to the elections, and my view of it, and I'm not really seeing it right now, is the current government, the coalition government, is talking about how do we alleviate the cost of living issues for Australians as it sits right now, and they're talking about some shaving of the fuel excises so they can make fuel more cheaper for Australians for 6 months, right? They're talking about 6 to 12 to 24 months into the future. When you look at the wider world, and if you look to the north of Australia with the People's Republic of China, mate, they're not talking in 6 and 12-month implements. They're talking generationally. They're talking about hundreds of years into the future. They're planning for the future to that significance. And Australia at the moment is not seeing the world, is not seeing its strategic intent in that particular frame. So I think the huge opportunity is for us to start thinking further down the pathway. Global warming is part of this. We spoke about it last time, Tom. But I think all Australians would benefit from potentially just having a little bit of a look at what's going on globally, some of the threats for Australia moving forward, and bringing this back to real estate, Tom. Real estate is a huge driver of the economy here. Most of us who have super funds, whether they're retail or industry or self-managed super funds, a lot of us hold bank stocks, mate. Guess where the majority of the value for Australians in their superannuation funds? It's there. And guess where banks derive a big significant part of their balance sheet capabilities and dividend earning capabilities? Mortgages. What are mortgages connected with? Real estate. Everything in Australia comes back to real estate, mate. So we need to be sure of the security environment that we operate and are operating in right now and into the future. What does it mean for Australia? And I hope and I want to make sure that as Australians, when we do go to the polls, that we are voting in a way in which we can ensure the longevity of this great nation we all live in, mate.
All right, Phil, we've gone over nearly an hour today.
Really?
Oh, just yeah, but yeah, it's 3 o'clock. All righty, Phil.
Good one, mate.
Have a good week. Have a good week, and we'll talk next week. And yeah, I think we're going to talk rent rolls more. I think we're going to talk about you know what I'd really love. I can tell from the audience that listens to this, there are a lot of people that are not just agents, but are actually consumers of property. You know, a lot of them are trying to work out what's my move in this current market. Do I do nothing, right? What's my move? I'd love to explore that a little bit further. All righty, Phil.
Good, mate. Good work, Tom. See you, mate.
Thank you.